Now, to understand how dividends really work, let's assume that a company makes $1 billion in revenue by selling their stuff. But this isn't all just profit. They have to have expenses. Like you got to pay for your employees, you got to pay for your rent, you got to pay for your machinery costs and everything in between. And if now the cost of running this business is, let's just say $500 million, that means this company at the end of the year will have $500 million in profit. This is cash that's sitting in their bank account at the end of the year. Now, when the company, the stock, has this $500 million sitting in their bank account at the end of the year, there's three things that they could potentially do with this cash. Option number one is they save this cash for emergencies. Maybe they want to build a rainy day fund because we remember when the pandemic happened, companies ran out of money very quickly. So one thing that a company could do is potentially save some of this money. Option number two is they can invest some of this money back into the company. Because now let's say this company wants to open new stores. It wants to open new manufacturing facilities. It wants to invest in research and development. It wants to open a new operation in Asia. Well, in order to do that, you need money. And if a company is trying to grow very quickly, they're going to be very heavily investing this money back into the company. That's why you don't see a lot of startups paying out dividends. It's because they don't actually have any profit. They're investing all this money back into the company and some because they're going out and getting debt. They're trying to find more investors. That way they can grow as big as possible, as fast as possible. But then you have option number three, which is a company can give this money away. Now, there's a couple of different ways that a company can give this money away. I'm not talking about giving it away to charity. I'm talking about giving it away to the shareholders, the people that own the stock. Now, the first way that this company can give this money away is by buying back some of their own stock. So if you have $500 million worth of profit, they can now go out and buy $500 million worth of their stock. And what does that do? Well, that helps inflate the stock price. Because if there's more buyers than sellers of the stock, well, then that pushes the stock price up. And the reason why some investors like that is because you don't actually see any cash in your pocket. Because if you just see the stock price of your investment go up, well, you don't have any taxable event because you only pay taxes when you sell or if you get some cash in your pocket. So if the company buys back their own stock, some investors prefer that because it's a way for you to make more money on paper because now your stock price is higher. However, the flip side of that is there's a chance that you don't actually see any of that money because then the stock price could go back down. Anything could happen and you don't actually see that money because you don't actually make any money until you sell your stock. So that's where the alternative is they can give it away in the form of a dividend. Now, when a company pays out a dividend, it's literally just a cash payment. It means the company is distributing checks, which nowadays are not checks. They deposit it directly into your brokerage account. The company is just distributing this money right into your account. And you don't have to do anything to really earn that money except own that stock or own that fund. And the nice thing about this is you can get paid without having to do any work because if you own a stock, you own a company that's paying out a dividend, all you have to do is own the company and now you're getting paid. But there are some cons with that because now you have a taxable event. When you get a dividend, you have to pay taxes on this money. Now you might think, but what if I take this money that I get from my dividend and I reinvest it back into the company or I reinvest it back into the fund, which is actually a really good strategy when it comes to building wealth, especially as a cash flow investor, because now not only are you contributing more money to buy more of this cash flow, but you're using your cash flow to buy more cash flow. It's a great opportunity and it's a great way for you to increase how much cash flow or passive income that some people like to call passive income. I prefer calling it a cash flow because passive income can kind of have a more of a deceptive title to it. But now, if you're generating this cash flow and you're reinvesting it, the goal is to generate more cash flow. However, even if you reinvest your dividends, you still have to pay taxes on that income, even if you never see it. So yeah, there is some downfalls to investing for dividends because you got to pay taxes, but at least you get that cash in your pocket today and you don't have to actually sell your stock to get any of the money. Personally, I like cash flow investing. For me, I like the security of having cash flow because for me, the game is to stack cash flow. Whether it's from stocks, whether it's from real estate, I want to stack the cash flow because now I know that this cash flow is going to keep coming in. And then my goal is to be able to live off of the cash flow because if I can use my cash flow to fund my entire lifestyle, well, now I'm financially free. I can do whatever I want and I can just keep living off of the cash flow. I can spend my money in whatever dumb way that I want and I know I'm going to get another cash flow check next month or next quarter. Most companies and most funds that are paying out a dividend are paying out their dividends or their cash flow payments every quarter, meaning every 3 months. Now, the reason why it's really important for you to understand when you're investing for dividends, you're not just investing for the cash flow, you're investing in the underlying asset, is because sometimes that dividend that you're getting can be deceptive. Let me show you what I mean. Let's assume that you want to go out and invest in this XYZ company. I'm not saying this is an actual company, just an example. And at the time, this is trading for $100 a share, and it's paying out a $5 dividend, which means it's paying out a 5% dividend yield. Not bad. But then something bad starts to happen in the company. They start to put out a bad product, people stop liking the company, and then the stock price falls to, let's just say, $50 a share. Now, if they haven't adjusted their dividend yet, that means this company's trading for $50 a share, their dividend is $5, which means now they're not paying out a 5% dividend, they're paying out a 10% dividend. Now, at face value, this looks like a much more attractive investment because take a look, you're getting a 10% dividend as opposed to a 5% dividend. But it's not showing you the whole picture because if you look at the whole picture, what you see is, yeah, you're getting a 10% dividend, but the stock price has fallen by 50%. So maybe there's something majorly wrong with the company. If you feel like this is a great opportunity to come in and buy this company because they're going to turn it around and you're going to see the stock price soar, then sure, it could potentially be a good investment. Of course, it has risks, but what you want to understand is you are not just buying the cash flow, you are buying the company. And that's why it's so important that when you're doing your dividend analysis, you look beyond just the percentage that you're getting, you look beyond just the dollar amount that you're getting, you look beyond just the share price, you're looking at what the company is and how strong the company is. And that's what should be deciding your investment decisions because you want to invest in the company, not just in the cash flow, because the cash flow number or percentage that you're seeing can be deceiving if you're just looking at that by itself, which is why that is just one piece of your investment decision. You want to look at the actual investment. That way you can make a smart decision for yourself. Now, when it comes to coming up with a strategy for how do you actually invest your money into cash flow producing assets or into stocks that are paying out dividends, one thing that I like to do, you got to come up with the best strategy for you, is I have funds that I invest in for cash flow. I have ETFs that I invest in for cash flow. And for me, what I do is every Wednesday, cash is pulled out of my checkings account and is automatically invested into my portfolio of ETFs. This happens automatically, this happens passively, and it happens consistently, no matter what, whether the market's up, whether the market's down. This is going to happen because I just want to keep stacking the cash flow. Now, as I get my dividends, I just reinvest my dividends because I don't need my dividends right now. But that's the game that I'm doing. That money is automatically being invested for me, and now I'm just constantly working to buy more cash flow. Every week, I own more cash flow producing ETFs. And now when my cash flow producing ETFs pay me with dividends, I use those to buy more cash flow producing ETFs. So it's become a machine where now I'm working to generate some income. My income is being used to buy some dividend paying ETFs, and then my dividend paying ETFs are buying me more dividend paying ETFs. But of course, you got to find the right strategy for you. But if you want to use your dividends to replace or supplement your income, you got to get started. You got to figure out what it is that you want to invest in, and then you got to come up with a strategy for you. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.